You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the podcast. Hope you've been doing great. As I record this episode today, it happens to be my parents' 50th wedding anniversary tomorrow. So I am preparing a celebration and hosting a party for them. And my anniversary is next week, 20 years. And so big celebrations happening. My mom, she thought, we don't really need to do anything for our 50th. And I thought, it's really hard for many people to stay married for 50 years. And I think it's something to celebrate. So we need to celebrate it. So I'm hoping that that goes very well. I have much to do after I record this episode. So today's topic, we are continuing with Mythbusters. And today's myth is that the infinite banking concept causes you to lose control of your money. Some people out there believe that you are tying up your money and losing access to it. Well, that's just funny to me. Because as I'm sure many or most of you know, building your own banking system is the exact opposite. It gives you control of your money, more control than any other system that I'm aware of. So how many places can you go ask for a loan and get it instantly? No questions asked, no applications, no credit checks. You just simply get access to the money. They just say, oh, you need some money? Here you go. How many places can you go and just request it and it just goes right into your account? And while you're borrowing those dollars, that same value continues to earn for you. Is there any other place? Well, you can borrow against your 401k account. That's one option. Although the rules there are more strict. You'll have to have a monthly payment, pay it off within a certain amount of time, and your funds that you've borrowed against will not be invested in the market while they have been borrowed against. Not to mention, if you end up leaving your workplace, you may end up having to repay your loan in a very short period of time, which may be unexpected. Or if you end up defaulting on your loan, if you can't pay it back, that would cause your loan to become a distribution and be taxable. So if you have a loan in a 401k, you leave the company and you need to replenish that loan. And if you're not 59 and a half yet, then you will also have to pay a 10% penalty if you take a loan and have to leave the company and you can't pay it back. And they recognize it as a distribution. Now it's taxable and penalized if you're under age 59 and a half. Some companies may allow you to continue paying the loan with that same company if you decide to roll the difference to a new 401k company. It's just kind of a mess. I would just avoid that if you can, or if you have a 401k loan, pay it back as soon as you can so you don't have that issue. If you were to leave the company, you don't end up with a taxable distribution. There's also another option out there where you can borrow on margin, which is borrowing against your securities accounts that hold things such as mutual funds, ETFs, stocks, etc. There's always the risk, though, of a margin call with borrowing against your securities. And if your equity falls too low, if it falls below the margin maintenance requirement, you will receive a margin call, meaning that you will have to deposit additional funds. You might also have to deposit additional securities, or you might be able to do that, or sell off existing securities to satisfy your margin call. But it may be something you weren't ready to do or wanting to do at that time, and suddenly you're forced to do it. There are also other rules and restrictions that might not fit your timeline. Of course, there's also property. You can always borrow against property, pull out a HELOC or a second mortgage if you have equity in the home or your home or another home that you own. And these types of loans, though very common and will come with a lower interest rate than your credit card, are not as flexible as a life insurance loan. You do not have as much control as you would over a life insurance loan. You will still have to make either a principal and interest payment or at least an interest-only payment every single month. You can't just skip months and not pay anything, like is an option with your life insurance loan, even though it's not recommended. Having control of your account and your loans is actually one of the most awesome benefits that come with whole life insurance and building a policy or policies, a system of policies for the purpose of the infinite banking concept. Having full control of your loan and being able to repay your loan on your own terms is completely unheard of anywhere else. At least, of course, like I said, I haven't heard of anything comparable at all. So that myth totally busted up. Next myth is it takes decades to see any benefits with the infinite banking concept. A lot of times when I'm talking with someone, they have this misconception that it's going to take a long, long time for them to see any benefits to building a whole life policy or at the banking system, or that they have to wait a long time to access their cash value account. Now, it may take a while for the internal growth to blow your socks off, but you can start utilizing the contract right away. I believe there are still some companies out there where you have to wait a year or so before being able to borrow against your cash value or access those funds. But the primary companies that I work with, you don't have that restricted time to wait. It's not that long, it's short. You can access the funds really quickly. So, although you may not see significant growth in the first few years of starting your banking system and whole life policy, the reason, due to the startup costs of your system, you can begin benefiting from your contract and banking system right away, not after year one or only year one, but month one. Being able to capture the earning power of your dollars for the rest of your life while also being able to access them right away is a definite benefit. Is there any greater benefit? That is just amazing. Those who haven't taken the time to learn might be focused on how you don't have access to every single dollar you put into the contract or any growth in the beginning years because they aren't looking at the big picture and they wonder why. Why don't I have access to all of my dollars in years 1, 2, or 3? Why don't I see any growth yet? And the reason is simple. Just like starting up any business, there is a startup cost to your private banking system using a whole life policy. Instead of that startup cost being a building, inventory, or employees, it is the cost of insurance, the cost of the death benefit. Because remember, there is a death benefit of much, much more than the premiums that you have paid that would go to your loved ones if something happened to you. Right away after paying your very first premium, that large lump sum would pay if something happened to you. So now your loved ones are protected with so much more than those premium dollars you just paid into the contract. Now, I know no one ever wants to consider or want to think about the death benefit as being a benefit. They don't really want to think about the death benefit at all. Nobody seems to really want to think about it. I mean, there are some out there who understand the value and want to protect their family, but I think a lot of people just don't want to think about that inevitability someday in their life. So they don't really want to worry or think about the death benefit as being a benefit, but it definitely is. For a lot of people, it ends up being like more of a side effect because we're more focused on the growth of the cash and what we can do while we're alive. But it's a side effect that's substantial for your family or whoever may be dependent on your income. If you have a loan against a 401k account or a securities account and you pass away, your loved ones are certainly not going to be getting a giant death benefit. They will only receive the value of your account minus the taxes. In addition, the other rider benefits that come with the contract that I have mentioned before, access to a portion of the death benefit for a critical, chronic, or terminal illness. So it shouldn't be that unexpected that there are a cost to these benefits, and that is the startup cost of your system in those first few years. And this cost is most noticeable in year one. That's the year where you don't have access to the base premium, which is supporting the death benefit, but essentially all of your paid up additions are available. But because of the way we are designing these policies, it eliminates that startup cost just as quickly as it possibly could. By overfunding the whole life contract with the paid up additions rider, you are causing the growth of the cash value account to grow much more efficiently. But even as you wait for the policy's cash value to grow and become a cash flowing machine for you, you have the benefit of being able to borrow those funds for another purpose, borrow against those funds for another purpose, for any other purpose you have right away, like paying off debts to outside banks and eliminating those high interest credit card debts or loans. Maybe there's a large purchase you need to make, or maybe you've moved some of your emergency savings into the contract as part of your paid up additions rider and you have an emergency, so need to access cash quickly. Maybe you simply want to invest in other cash flowing assets. Whatever the purpose, you will have access to those funds and absolute control over how and when to pay the funds back. No questions asked. You can enjoy the benefits within your whole life contract basically as soon as it's been opened. So, no waiting for the benefits, they are immediate. The growth will be a little slow in the beginning, but there will be benefits to the contract immediately. So, if this sounds like something you are ready to do, to implement, and you would like to partner with me, you can go ahead and reach out to me directly. You can reach me at Valerie@alphaomegawealth.com. I look forward to meeting you and learning all about you, your financial goals, and the goals you have for the infinite banking concept. Thank you for listening. As always, I hope you have a great week. Take care.